There are so many misconceptions when it comes to trade inducement type of setup into the market. First thing first, a lot of people don't understand the three type of inducement and their importances, mostly on how to identify them. Secondly, they don't understand that you cannot trade all three of them in the same exact way. So in this video, I will tell you the differences, the importance, and how you should be trading them at the best of your advantages. As a bonus, at the end, I will tell you also which type of inducement setup is the most profitable and safe to trade, and which one is very risky if you're a day trader. So this being said, let's get started. Alright guys, before I start, I want you to be aware of something very important, which is the terminology behind the inducement is not the holy grail. I see a lot of people nowadays, like literally trying to sell you out with this terminology and telling you, oh, this is the holy grail, this is the red pills, this is the blue pills, you need to know this and you need to know that, okay? This terminology has always been there into the market, okay? The terminology, but it has been used in other wording for people to trade. However, one important thing that actually came out with this terminology of the inducement, right, is the understanding of the minor, medium, and major. Okay, the three type of inducement that we have into the market, and understanding how to trade each one of them will give you some sort of advantage, something that previously was not mentioned in any other different wording. So the inducement terminology was usually like fake out, FU candle, or stop hunt. Those are the terminology that has been always used, but nobody has ever differentiated the importance of the type of fake out. Okay, so that's what we're going to discuss today, and that's why I'm going to give it to you completely for free, because guys, you don't need to waste money for this kind of stuff. Like, for real, there are a lot of people charging so much money just to explain you what I'm going to show you now. So hopefully you guys are gonna learn a lot from here, and hopefully you're gonna take a lot of notes, because you're gonna need that. Okay, so why it is important for you as a day trader to be aware of the three types of inducement. First thing first, let's try to classify and understand each one of these type of inducement. Okay, so when it comes to the minor inducement, usually the most important minor inducement that you have is the Asian high, okay, and low. So this one here is literally the most important type of minor inducement, okay, that we have on an intraday basis. What happens is that there are so many type of minor inducement, so many type of medium inducement, so many type of major inducement. But what I'm going to show you today is I'm going to give you what you need to know. Okay, you don't need to know all the type of minor inducement, all the type of medium inducement, or the major inducement. You just need to know the one that will help you to trade in the best way possible. So this one is the minor inducement. Then we have the medium inducement. What are the medium inducement? The medium inducement are none other than the previous day high and lows. Okay, as simple as that. They are known as a medium inducement. And then finally, you can already understand that if you have a little bit of experience, that the last one, which is literally the major inducement, that is something that refers to anything that goes for weekly / monthly highs and lows. Okay, so far so simple, nothing complex, nothing crazy. That's what is about the three type of inducement. Now, why they are so important? Now we're gonna go to the chart, and I'm gonna show you some stuff for you to understand how you should be trading them and what are the importance of this. Okay, so the Asian high and Asian low is the most important one, is because when you trade, most of the traders, they always start trading by London session or New York session. So we all know that every single day is made up by three important major sessions. We have the Asian, the London, and the New York, right? So what happened is that the Asian high and low is literally a point of reference for anyone that's trading liquidity. So every time that you see people that are doing scalping, or they're trying to take an intraday trades, all they do is literally, when London session comes into the market, they try to wait for one of these two sides to be taken out, right? So the Asian low or Asian high, in order for them to do what? To take the trade as a retracement. So let's say if this is London open, so if you have, let's say, London session over here, what they do is usually, if they see this low that get taken out, in this case the Asian low, they just take the pullback, all right, of that session open, and they try to target all the way up here, which should be the next target as an intraday focus, okay? Because usually, according to the daily cycle, which is something that is kind of linked with the inducement, usually the Asian high and low, that both get taken out. So if you backtest that on the chart, you will see most of the time, not saying every day, but let's say 50-50, 60-40, okay, you will see the Asian low, Asian high gets taken out. So what they do when they try to trade the minor inducement is they try to take here in the London Open and they try to target over there. That's literally the setup they try to do every single day. All right, and that's how it works on this exact concept. Now, when it comes to the medium inducement, is pretty much people that comes, let's say, late in the London session or late in the New York session. And what happens is that if Asian high and low is the first objective for the day, the medium inducement, right, becomes, which is the daily previous day high, previous day low, becomes the next objective target for a day trader. Okay, so you got the Asian high, Asian low as the first target, then you got the previous day high and previous day low. So let's say you miss this one, then you go and you try to take a trade towards that direction, towards the medium inducement. But that doesn't mean that you have to take a trade towards the medium inducement, so daily high, daily lows only, but you can also trade away as soon as you see that price takes out what? Previous day high and previous day low. So whenever price takes out, let's say from here, right, it comes here, it takes out, then if this aligns with, let's say, your New York session or even if your London Open, then you can take the pullback away from it, because this one is just a fake out. Okay, and then finally you can understand that the weekly high, monthly high and low usually, all right, when you have that, is the target for the week. So that's more something for not intraday, but let's say for between swing and intraday sessions. Okay, so those are like the, let's say, the very basic understanding of how this works. Now we're gonna go to the chart and I'm gonna give you some in-depth examples and explanation, and then later I'll tell you which one is the best and which one you should be very careful about. Okay, so now moving to the charts, you guys can see I got a lot of coloring over here. Don't worry, don't freak out, because you guys know my charts are always empty. Okay, you guys also know that I don't trade liquidity much. Most of my stuff is all based on structure, supply and demand, because that's the best way to understand the market. However, the reason why I'm making this video is because I know many of you probably are trying to learn how liquidity works, and I want to do my best to give you that as well, because I've been through, I've learned it, and I realized that that's not for me. That's not something that I personally like to trade, but it still has potential because it gives me a lot of confluences when it comes to trading. So if you guys are asking what are these blue boxes, those are my Asian highs and lows. If you see these blue lines, those are the daily, the range, and then if you got the yellow one, these are like the weekly range. So in this chart, I've taken a little random chart. So in this one, let's start seeing what actually happens every time the price takes out the Asian high and Asian low. Okay, let me pull the session, so we're gonna go literally in depth as much as possible. So let's start from over here, Monday. Okay, so if you guys, let me explain you how the session works in case you don't have the indicator. The orange one, the purple one is the Asian, so you guys can already see from the box. The green one is a London session all the way till here, is around 5 o'clock UK time. And then the brown one is literally when the New York session comes into play, right? And then so on for the rest of the day. So why this is important now, let's jump on this. So this day, okay, this was like Monday last week, we can clearly see that we have Asian low, Asian high, and then you can see clearly that price takes out during London session, this is London session, takes out the Asian low, and then it pulls back all the way up there. Now I know a lot of people, a lot of traders might have taken a trade over here in a smaller time frame, and they have probably targeted all the way up there, right? But in this case, you can see the price came in the midline, okay, of Asian session, which is a very important liquidity zone, right? And then from there, it just reacted away to the downside. The very next day, the same thing, guys. By the way, if you backtest this, you will see that 99% of the time, every single day, price will take out either Asian high, Asian low. And that's a very important information for a day trader, because it allows you, it helps you to understand where the target is, right? So for example, in this case, you got Asian low, Asian high. You can see that during London, this is the London session, nothing has been taken out, right? Therefore, during New York, you know, somewhere around here, that the likelihood of going here or there is extremely high. And that's literally what happens within the New York session. The Asian low gets taken out. And then again, check this out, Asian high, London comes into the market, gets taken out, the Asian high, then we got New York session and pullback, same thing again, it's like literally almost every day. Now, I want you to pay attention, because here is where the most important thing comes into play. This was the minor inducement. If we move to the medium inducement, that one that I said to you and I told you is the most important one, because it refers to the previous day's highs and lows, right? Then you can clearly see that now something started being very, very different, right? So for example, let's start with this one. Okay, this is Friday. Let's start Monday. Whatever, it's the same thing. Okay, let's look at here. So this one is a single day. You got Asian high, Asian low. It gets taken out, and then what price does next is that during London, it takes out this previous Asian high, right? And then on the top of that, it takes out also what? Wednesday. You see, this is Wednesday range. You have Wednesday what? High and low. Is a previous day high, is a medium inducement. The price takes away, and then look at the reaction that you have now. Do you guys see the difference between this reaction compared to this reaction over here, compared to this reaction over here, or compared to, sorry, not this one, but look at this one compared to this reaction over here, or even this reaction over here, right? This one is very, very big, right? It's almost the double. And especially now we're looking at 1 hour. We're gonna go in a smaller time frame, then we can see the potential of that. Okay. The same things goes every single day. In this case, you can see, so this price takes this one out, right? In this case, again, it's the same thing. This Asian high that we were talking about earlier does what? It takes out an important previous day high. And we got previous day low, right? Look at this. As soon as it takes out during Asian, look at the pullback, the reaction away from it. The same things over here on Tuesday. Look at this. Asian low, Asian high, and then price during New York comes over here, right? Takes out what? This previous day low, okay? Again, medium inducement, takes out, and look at the reaction. Pay attention to this because, guys, this is gonna help you so much to understand when exactly you should be taking a trade or not. Again, previous day high, gets taken out, previous day high, gets taken out, and check this out, boom, reaction away from it. We can carry on like this for like every single day, okay? So now why it is important for you to know that is because, let's say, if we go, by the way, let me show you first also what happens. Now we can already understand that if the daily gives us this type of reaction away from it every time the price takes out liquidity to the left, you can guess now what happened to the price when it takes out the weekly high and the weekly low. So for example, over here, what this week, so you guys can see the yellow line. So I go from Monday over here to all the way to Friday, right? So they got like, this is the whole week, and this is my weekly high, this one over here, right? And then this is my weekly low, okay? So check what happens when this week, literally this week, as soon as we open in, let's say Monday, Tuesday, look at this Tuesday, price takes out the previous week's high, and look for the whole day, look at the reaction away from it. Like, that's crazy, and that's a very important for information for you, because when price does something like this, let's say within your session or your window, and you're taking a trade, you know that you're about to make a lot of money. Do you, right? You know that you're about to take a lot of pips down to hell. And the same goes obviously on the other way around, right? So if you pay attention, we go, again, this is the block. We saw this was a previous week low over here. By the way, this is the major inducement that we're talking about right now, okay? And then if you pay attention, this low over here is the same exact thing. Why? Because if we check it out, okay, let me remove the session so that will be clear. Otherwise, all this color will just confuse you. All right, I think that seems better now. Okay, so from this box, yellow one, to this yellow one over here, you can clearly understand that this low over here, right, is the weekly low, and this high over here is the weekly high. As soon as these get taken out, literally when today is Thursday, look at the reaction away from it. So where do you guys think this is going now? Well, next liquidity available is this Asian high that probably will be taken out tomorrow. And then the very next one could be this over here, right? For the upcoming week. Now, do you guys see why it is important for you to be able to distinguish the three different types of inducement? Because you can see already that you as a trader, right? If you understand the value that holds every single type of liquidity I'm showing to you now, you can understand how much you can make every single time and how far you can take your trade away with it, right? So if you go back to the over here, let's say this was the first example we did, okay? As soon as price take out this over here to the left, which was the previous Wednesday out, you can jump literally on, let's say 5 minute, 1 minute. I personally use a lot M1, okay? So I don't trade liquidity, but again, if that aligns with my structure and everything, I'm like, okay, I'm taking it. You know what I mean? So now let's go over here. We know to the left, the price has taken what? What is it? This arrow, this is the previous day high. You can see price goes high, it goes low, then it goes high, low, and then it start ranging. Now this ranging itself, you guys remember I told you about the minor inducement. These are different type of minor inducement, but I'm not going depth into it because I'm going to confuse you. So for the time being, just know that there are 3 type of inducement, and those are the 3 that I'm sharing with you right now. But this is a minor type of inducement. You can see there's a build up. Look at this, it's the same exact thing. Seems like an Asian box, like a small Asian box that gets taken out to the upside. And you remember I told you earlier that what price takes out the liquidity on one side and then goes to the other side. And you can clearly see that price does that not only one, it tries it a second time as well, and then it breaks the structure. Well, that's exactly where I would have taken the trade, based on structure, without using liquidity or anything, right? Then when I take this, let's say you put like 3.5 pips, something like this, there is an imbalance over here, okay? And then you can literally nicely target where, if you want it, as I said before, the midline of the Asian session, which is itself is a nice 1 to 6 risk to reward. Okay, now I don't target Asian, like I don't care about this or that. For me, I target structure wise. You guys know I trade a lot of structure, so for me this was the decisional, this was the extreme, because this was the one that pushed price to break the structure. So eventually, as you can see, liquidity or structure, whatever I do, that all aligns in the same exact way. Okay, now this is very important. So let's move to a few more examples, because then you guys can understand based on what Tuesday highs and low. And the same way I broke you down this, it can be applied literally here. Okay, let's do it, because if I do it with you guys, I feel like you guys understand better, rather than leaving to you to analyze that and trying to understand what exactly is happening. Okay, now this one was very late in the day. Price takes out, it comes over here. Okay, high low, comes all the way down here. And then here, that was a joke. That was a very nice entry. Of course, you have to always see what's going on to the left. But me, the I trade structure in M1, you can literally see price goes up, down, comes over here, right? It shows some type of intentions going to the downside. And as soon as price takes this out and it closes over here, this is a very strong signal. The price wants to go higher. Is like, you can call it dodgy candle, whatever you want it, but this rejection itself is a very strong intent for the market to showing you where exactly it's going. Now, obviously, you can see that when this gets taken out, by the way, I say structure now, but I always refer back to something to the left as well, right? Usually I go and pick up some type of imbalances or some other important areas. So if we go underneath this, right, and we see what exactly we have over here, we have more liquidity. Now let me get in. Okay, here we go. I can already see over here there is an imbalance, very nice imbalance over here, right? And also underneath the imbalance we have some sort of nice liquidity. Okay, why we got liquidity? Because we have equals over here. Now, nice one. Let's go and see if price stepped into that range. It should be. Where is it? Oh yeah, exactly, perfect. You see, that's what I was talking about. Didn't I say there was a liquidity underneath that? Exactly. Liquidity got taken out. It's very late on the day, but hey, still is a valid setup and is a very nice one. You can see the price exactly fails to close below this zone. That was where we had the imbalance, and then boom, price reacts away from it. Okay, so the same things goes all over again every single day. Now you guys can clearly see that I've been showing you examples about the daily highs, daily lows. But what if we try to take over here, like the Asian low, right? So if you go to over here, Asian low, Asian high, you can clearly see, okay, 1 second, let's get to it. All right, so if we come over here, price get taken out, and then goes up, come down, up, down, up, down, up, down, break the structure, then you could have taken from this decisional or this extreme. But you can clearly see it didn't go very far. Now, you remember when I said to you what type of inducement is very risky that you should be cautious about? And that's exactly what I'm going to tell you now. In my opinion, right, I see a lot of like scalper, they trade a lot Asian high, Asian low, which is fine, which is beautiful. They do actually make some good returns, whatever. But I feel if you just pay attention to the daily highs and low, for you to make at least minimum 1 to 5, probably one of the easiest things that you can ever do. Like literally for real. Of course, you're gonna hit losses. Also, there are losses as well. And I'm telling you why, because unfortunately, right, same as any other concept, because a lot of people have been laughing about smart money concept, saying that this is a BS, it's not working anymore. But guess what? If everybody are trading the same thing, which is the Asian high, Asian low, blah, 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 what do you guys think is going to happen to the price? What do you guys think the price is going to start doing? Okay, I'm going to show you something. This is actually a very nice example. I know a lot of people, right? Check this out. You see, this was a previous day's high. They got taken out. And then there is a very nice same candle. You remember the buy I took earlier with the candle? Look, the same thing. I know a lot of people would have gone for a sell over here. But eventually they would have taken out. Why? Because that's exactly what is happening now lately with people that are trading a lot of liquidity. So basically the previous day, this is the previous day over here, right? Gets taken out. And price gives a reaction. And a lot of people start selling. Price push one more time to the upside, takes out all these early sellers, and then as soon as you have that, bam, price goes away. And that's exactly what happened over here. But guess what? I use structure, so I just follow that, and I can clearly see the price goes high, low, high, low. Again, it builds up liquidity over here. Same example I told you before, right? You can see it shoots to the upside, then it breaks to the downside, and there was a nice trade over here. Then boom, down we go. Okay? So, this being said, if I showed you the example of the medium inducement, which is the previous day highs and low, and you guys seen the potential just with these couple of examples, now you can imagine if you were to trade the previous week high and the previous week low. So in this case, we have this arrow over here that we marked earlier, right? And what did I say? That this gets taken out. This was within the Asian session. So now if we jump over here, let's see what type of opportunities we got over there. So I go to 5 minutes. Actually, I usually just jump immediately to M1, right? And then what we got over here is that we know price has taken out. Where is my arrow? 1 second, guys. So it's lagging a little bit. All right. So if you got this arrow over here, right? And then we jump to, let's say, M1. Let's see what happens. All right, here we go. You can clearly see that price comes over here, right? It takes out this liquidity, okay? And here you can see the order flow, the way it starts shaping it out, right? We got this low, that makes this high, takes liquidity out, and then it starts creating the order flow over here, right? You can clearly see that. And then same thing goes again over here. This one is actually very nice. It's a bit of advance, but you can see high, low, comes here, liquidity that gets taken out, break, and then you got a very, very nice trade over here, right? So then if you were to take this trade over here, you could have placed your stop loss somewhere above this, 2.5 piece, that should be just fine, okay? And then guess what? You could have targeted, can imagine, very, very far. Why? Because you now know that you're going away from a major inducement, which is literally the weekly high and the weekly lows. Okay, so in that case, what you can do, you can look for the next most valid liquidity point, which is literally this Asian low that's never been taken out. Okay, so what we got over here is this for a nice 1 to 17. Okay, look at this. Let's see what happens next. Price gives a bit of pullback, it comes back, and boom, the next thing you know, boom, price literally drops all the way down there, okay, for a nice 1 to 17. Of course, you could have targeted other liquidities like this low, and as you can see, price takes it out and then reacts away, but still is very, very fine, okay? Now, if you guys notice, there is a very, very major in details between this trade and these two trades over here, compared to the trade that showed over here, right, which is the Asian high and Asian low, is the return and the risk to reward. So what do I mean? I personally, as I mentioned before, see a lot of traders taking the Asian high, Asian low. But if I have to be honest with you, if you're a day trader, try to focus only on the previous day high, previous day low, weekly high, weekly low. Now, again, I'm not a financial advisor. This is just for educational purposes. But if you try to backtest the way I just showed to you and I gave you to the example, right? Obviously, there are so many other confluences that you have to align with it, right? Like the timing, the session open, the session closing, and whatsoever. But whatever I just shared with you and I'm showing to you is literally the very basic of understanding the trade differences between the three type of inducement and how you can take the best advantage of it. You can literally understand that this one with a 1 to 17 that can be also 1 to 20, or let's say even 1 to 10 is way more profitable than this one over here, right? The three type. So the major is always going to be the most profitable type of setup that you can have and the most profitable for you as a trader if you want to take a very nice risk to reward. Then we have the medium one, which gives you decent returns. Even this one is not that bad, or even this one that we've seen together, right? And then we have the minor one. Now, I'm not saying that you cannot trade there. Of course you can trade there, right? But you have to be very, I'm not saying pro, but you have to have a very deep understanding of the way the market moves within the intra-session, right? Different type of sessions. And that's the very important factor, because in this way, you will avoid a lot of loss, especially if you're not someone that has mastered the way of trading the minor inducement with the Asian high and Asian low. And the reason why I keep saying to you guys, this is something that I'll make for another video. The reason why I'm saying that I don't trade liquidity, because there's something else very important within this understanding of liquidity, which is the structure. Because you can clearly see that this low that made this high, this setup is a counter trend. And I don't personally like much taking a counter trend unless I don't have very, very important confluences. And the same goes over here, the same goes over here, and the same goes for every Asian high low that gets taken out. Okay, and that's why there is a big clash between people that trade structure and people that trade liquidity. In reality, that both works. It's just you need to know how to identify the differences between them and how to build together the whole narrative in order for you to take the best trade. So I'm not saying they should not be trading the Asian high, Asian low. All I'm saying is try to backtest what we discussed over here. I truly hope you guys understood the difference between the three type of inducement, the importance of the type of inducement, because you, as I say, the different type of returns that you can have based on the type of inducement you're trading. And then finally, if you wanna again trade also the Asian high, Asian low, that's usually up to you. I'm nobody to say no, don't do it whatsoever, but make sure that you backtest enough and you have enough data in order for you to understand what exactly are you trading or not. Okay, and you can see that this goes all day along in every single week we can see, and every single day of the month. So this being said, if you guys want to know more about the differences between the liquidity and the structure and what are the key differences between these two, make sure you watch this video over here, because I'm telling you that will give you a very in-depth understanding. It's actually one of the best video on my channel right now. And this being said, I'll see you to the next one.